Hello guys, welcome to Traders Therapy Session. I'm your host KRO. Welcome to today's video, the last trading day of the year. Without wasting any time guys, let me just get into the video. Guys, in this video, the aim of this video is to walk you through my day of analysis and my day of trading. It's just to walk you through my day of analysis and my day of trading, so you just follow for a minute, for a bit. I'm opening the daily charts, and on a daily chart, what you want to do, and this is for intraday and day traders, what you want to do, you want to treat your daily chart as a daily chart, not as your trading chart. And you will see what I mean by that. You need to have a right psychology to treat each and every time frame. So on a daily, what we have yesterday, we have the market, we have the price breaking out, taking out the high, and then closing bearish. So on a daily chart, you are just looking for that, guys. That's it. You check whether the price is going to take the high or the low. Then that's it. You get your bias. You move on to the next time frame. So I will give you the tips and tricks on how to treat your psychology in each and every time frame until you get to your entry time frame. So on a daily chart, because there are 24 hourly candles in this, we are not going to focus on many things here. We are just going to see the closest hanging fruit, the draw on liquidity. We open, we have a daily low and we have a daily high. I just spotted the busy, a fair value gap, a buy fair value gap in a form of a buy side imbalance and sell side inefficiency. So this is a draw on liquidity for me. This is where price can be drawn to, or price can be drawn here for the day, guys. So now I'm 50-50, but my bias will be more favored on this because we have more, but we can still go higher. I'm not going to base my bias on that. The lower time frame relative to daily, not the noise, the lower time frame low relative to daily will just give me the ideas of where the market is willing to go for the day. So let's just move to, and by the way, we have the highest high. This is the time the Nasdaq in history made its highest high on the 13th of December, and we have this candle right here, of which I call it an order block. The midpoint of this candle, I call it a mean threshold. This is the price. I will be looking for price in future, whether the price will be coming here. But remember, this is a day. This price to come here, it will come here next year. So the highest high, this, I will look at this. Plus, we have the gap where market did not trade, and we know the market makers don't like to leave price like this. Price has to come in balance. So this is your long-term bias. Let's move into 1 hour. I want you to focus here. I want you to take this daily low, sell side liquidity, previous day low, into consideration, and this fair value gap plus this high. We are only going to look at price here and get the bias whether we are going up or down. Focus here. Our focus will be here. You are just zooming in. We go to hourly. Let's put this. There are no news today. We said we are going to put our focus. Okay, let me put this thing close because it's going to help us in our discussion soon. So on an hourly time frame, I said we are going to focus only on this price. So we zoomed into the price. We want to see whether the price is willing to go high or low. Then this is what we do. We just open now 4 minutes ago. London market just opened 4 minutes ago. On an hourly time frame, this is what you want. Remember, on a daily, you want to take the bias whether you are taking out the high or the low, whether you're going high or you're going low on a day. But on an hourly, you don't even take these big moves on the hourly. Remember, this is the whole day, and you want to be on the market maybe for 2 hours at most. But for 30 minutes, 15 minutes, 20 minutes, you don't want to trade this. These are hours. So on the hourly, you must have a right mindset as well. What should you look for on the hourly time frame? You look for immediate internal and immediate external liquidities or inefficiencies. What do I mean by that? If you can look at this is an external liquidity. This is an external liquidity. This high this low, because the price is external. Remember, I taught you about internal and external liquidity on the videos. If price is moving like this, it means these are external liquidity range. So internally, you will have something moving like this into this price. Internally, you will have something moving like this into this price, moving even higher. Am I making sense on this one? If I'm making sense, this one, this is external. This, let me change the colors so that it can make clear. So on this move higher, going higher, let me make also an ellipse. This was just one move. This is one leg higher, just like this one leg high. But inside, if we zoom in, we're going to get the pullbacks and impulses again moving high. So on hourly time frame, you target the immediate internal liquidity or immediate external liquidity. You cannot just come from here and want to target this. You only come from here and target that on 1 hour. You must have a right mindset approaching this. So what is immediate internal liquidity on hourly plus inefficiencies? We have a fair value gap, plus we have this liquidity right here. We have this liquidity which is far. You cannot wait for market to go for this liquidity. You rather trade the market to go to this, because if you look at this, let's look at the ticks. Remember, average of ticks, the ticks that we are trading from 100 at least to 400. You see, it's it's 100 ticks. This is a trade on its own. You're supposed to trade this, not to wait for it. So immediate internal liquidity is this one and this one. External should be this one for now. So what we are going to do, we are going to check if when we break this liquidity, are we displacing higher or are we displacing lower? Because if we displace higher, it means that we are after this liquidity. But if we displace lower, it means we are after previous day low, and maybe we can even run to this one right here. So now we'll go to 15 minutes time frame. Getting into 15 minutes time frame, you also want to target the immediate as well. You follow the 1 hour time frame. You go after immediate liquidity range and immediate internal and immediate external. You look at what is closer to you as a liquidity. This was closer. You see, before London open, London just open on top of it. You see, this was closer. What is the next close liquidity? Is this one, then this one, then this one, then this one. Looking at the higher time frame, let's go back to 1 hourly time frame. And looking at the higher time frame, does a market want to go up to this far? Then you will look at this order block. You can take this candle right here. You can look at this order block just to remember there's an excuse after liquidity. You can look at this order block and the mean threshold can be your target. And see, if candles close above this, it means that we are going high. We have changed the narrative. So now let's go back to that 15 minutes. Forgive me guys for taking long, but I just have to make this thing. I just have to make you understand this. So on a 15 minute, what is it that is going to stop the price to go even high? Remember, I have this order block right here, and then I have this equal highs, as you can see. Then I will treat this ones as my rejection block right there. So I will see how price reacts on the rejection block, and if it reacts above this, that means the price is yes ready to what? To displace higher. So I'll go to 5 minutes time frame, and this liquidity low, you see price came up taking this liquidity high, I mean to say, up to this level. I will also want to see price closing inside this when hourly time frame close, because this is an hourly fair value gap. I want to see price closing inside hourly candle closing inside this, not disrespecting this. But once it disrespect, it means we go high, or we might just disrespect just to move lower, but it's low probability once that happens. So let's go to 5 minutes, of which is our last time frame to go to for now. Lower than this, it's when we seek for sniper entries, but besides this, you'll be looking for noise. So we took out this buy side liquidity right here. Then we still have this rejection block. We don't have any efficiency that we can go after or invasion fair value gap right here, except going for this area right there. Then I will see the displacement after. I will be watching this, guys. I'll be watching the price from here. From now on, I'll be watching the 5-minute time frame. From now on going forward, I'll be watching the 5-minute time frame and referring to the 1 hour and the 15-minute highs and lows they immediately quit, whether they are taken. I no longer have to watch those. I just have to refer back to them, but I will be watching how price moves from here. And plus, you can see how much the move you can take. If you take this high and you say, let's say it will be a breaker here and you get your sell here, and then obviously you want to go to this low, you want to take your partials as you go from here, then you can catch your 130 ticks with a stop loss of less than 50 ticks, or we don't know how high the market can go. With 50 to 80, that can be 120. That can be 1:2. I mean to say 1:3, depending on your risk. Remember that we are trading every day. The market is not going anywhere. You just want to take that, and as you take that, you leave the market. You just worked. The market is not going anywhere. You're gonna come on the next session or on the next day, do the same thing each and every day. If this is your hobby, if this is your dream, you wanna do this for lifetime, then you don't have to rush the learning. Just let this thing unfold to you. Guys, I will see you on the next part of this video where I will share the feedback with you. See you. Hello guys, welcome to Traders Therapy Session update for last day of trading in 2023. Okay guys, in the morning I guess I marked out certain levels here. You will watch. I did not watch that video just for update. I was just watching the market, and there are several pictures that I took just for update, to update you on the trades that I took here. But there's no need for pictures, I guess, once we come in here. Remember that we talked about when we'll see whether the price, when price comes here, it will displace higher or it will displace lower. Then what we found here, we found out that the price is displacing lower. Everything else that we've been trying to do here was to catch out this price. And I guess out of this, we lost one trade. And then this one right here, the one that you will see me taking here, the one that you see me taking here was also late. I was also late when I realized that this is displacing lower, and we have our breaker right here. We had our breaker and we had our fair value gap right there, but we did not test. As I was waiting after the market structure shift for price to come, then it did not do that. Then it came lower, but our buyers were correct, guys. From the morning, our buyers were correct and we participated on those trades. I will update you. I will try to even update the pictures there when I took the trades. But anyway, guys, now we are waiting for our last session, of which it will be AM session. We'll wait for NYSE to give us the direction and see if we can capitalize or not. But we are not forcing things, guys. We are not forcing things. Okay, this is what transpired on the last trade that we took. You will see the pictures. I was aiming for this, but my scale ins, guys, were first. I talked about this line in the morning as a target, that in the morning, meaning in my country, guys. We were targeting this previous day low as a sell side liquidity. So we targeted that. My last TP was here. Then the first one was here. I missed it at the first time, so I had to go out here. But the rest of the trades, I just had to took out as it approaches this liquidity. Then I need to reset, wait for NYSE, and look where the market is taking us. But one other thing that I like to outline here, let me go to 5 minutes. Is it 5 or 15 minutes? Is it 5 or 15 minutes here? One thing that I like to outline here, here are the retail traders setups here. They will see this thing as being what? A head and shoulder. This is what I used to trade as a complicated head and shoulder. Then that was the retest. In some of the pictures you will see I was aiming for that. Guys, without wasting any time, let me see you in the next video.